Good morning. Brian Johnston talking this morning on zero and some implications that zero has. And we're looking at Brian's index, which is the 8 major currencies, and when the lines hit the zero, see how the narrowing, all the currencies come together. Now this narrowing of the lines and coming to zero is the way you can see when all the currencies are in agreement with the market. The market is always out of agreement, as this is market efficiency. But as the currencies all come together at that 0 point, the currencies tend to move together like the major 8 currencies. And how can we benefit from that? So that if we know that the currencies are going long, as in here, and they cross that 0 point, there's a good chance that you will change into the long trend, or if they go the other way, you will change into the downtrend. Okay, so we're looking at there is an uptrend. This is the theory of I used to use in Brian's zero and in the rollover, and you notice there is consistent times where these points come and when the rollover can be in play. Okay, some multi-traders are wanting to come in. Right, so now we want to look at and come back and put it in a different time frame to show you something different. So we've discussed that. Now we're discussing the effect as the currencies are tied in with the US dollar JPY. If we look at the currency chart, the relative strength of the US dollar is 5.1 and the JPY is at 5.7. As this brown line indicates, this is the US dollar JPY, and the JPY is stronger than the US dollar. It is falling away. This is a basket chart showing the baskets in relation to the highest high and the lowest low and the US dollar cross. And notice when the US dollar JPY crosses the market at a certain time, it indicates the strength of those currencies. Of the 14 currencies are moving along, and when the US dollar crosses that line, the currencies are going short as a rule. This is 0 points of the cross between the US dollar and the current price. Interesting, isn't it? So that we can see here that when the agreement of price of the US dollar JPY and the price came in together, one started to change directions to the long. This effect is used in trading currencies against the US dollar as an example. And here we have an example, so it makes it hard to see on the three. When the three currencies, in particular, I put on here an overlay of the US dollar. This is the US dollar JPY. This is the current Euro Great British Pound, and this is the Great British Pound US dollar, and this is the Euro US dollar. So you can see on this chart it becomes hard to see the points where the three touch is 0. If we go back to our charts, this is how the zeros have been calculated and the distance away from the 0 points. We often use zeros to look at entering a trade and following the trend. It's ideal to look at the basket and you can see the current trend of that basket. You can see that actually in conjunction with the US dollar JPY, the JPY is stronger than the US dollar. It's moving slightly down. If it was the other way, it would be moving up. But in regard to the two, the basket of 14 currencies is long. That's pretty true when you look at all the currencies in condition that they are all moving up and are up near their highest high levels rather than their lowest low levels of the 14. So this is the way that the zero was adapted on the charts. We have adapted the zero to the basket method of trading, and to use that 0 point calculated using the profits of the entries of the currencies and finding the 0 points and how many pips away, so that in all these currently these currencies in groups are that many points away. If we look at the US dollar, we can see on the day it's 39 pips long, and if we look at Brian's 8 currencies and we cut that back in view, we can see that they all went long there. They're not always going to be zero together, but the trend of the overall trend is up. I hope that gives you a few ideas of using the US dollar JPY. As I explained earlier in another video, that it was really helpful in the US dollar Canadian dollar cross, that you could actually see when, because both currencies are very close together in price, when the crossover from short to long happened, and you can use this in your trading. I hope this just gives you a general idea of the use of zero and how we developed our indicator for the zero. Okay, that's about all for now, but just remember that when you're using the great indicators developed by Forex for Fun and Paul, you can appreciate the work that went into them and the effort, but it gives you an indication of the using the zero, the points away from the zero, and you can use this as an overall trading platform by looking at this for your buys and sells, and then looking at the actual charts using the basket. You can see the trend of the overall 14, the hedge, the current trends, and of course the great indicator, the basket hedge, which has put on a lot of ideas that I've incorporated in my Excel chart, the world of Brian. Bye for now. God bless. Have fun trading and enjoy it. Bye for now from Brian.